Nice. Cool. We're live. Fuck yeah. After some minor technical difficulties. So everyone listening right now, the Brotatos, I think, are all in the one spot for like the second or third time ever. This is the third time that Brotato Capital has been in one place at one time. We're currently sitting in my apartment in four separate rooms, because this is a very high budget kind of production, and we have all the necessary infrastructure. So
And Sassal does charity work on Tuesdays, so I think we're in luck, honestly. So
yeah, mate. Yeah, today we're speaking with Anthony Sassano, aka Sassal, known for his love of Solana across the crypto Twitter app. So it's gonna be an interesting discussion.
Quite the intro there, but thank you for having me. Yes, it's true. I've become a Solana maxi over the last couple of weeks.
Oh, dude, you've been telling me all about the meme coins that you've been buying, and it's just wonderful. It's I'm glad
Yeah, it just brought
hear
out my inner degen again, and yeah, it's just been great.
Well, I think the PFP is no Sassano with hat, so.
Exactly. I mean, I did it originally. I've always had my hat on, so yeah, I'm the OG with hat.
Sassal with hat, the first to ever do it.
Oh no, yeah, someone's gonna go create a tick over on that now. Shit.
Fuck. I'm keeping an eye on Pump Fun as we speak, just in case.
No, it'll be on base, bro. It'll be on base.
What am I thinking? Yeah. Oh god. All right. Fuck yeah. How do we want to begin this? Swiss, I believe you had some questions to get us started.
yeah. I've asked these before, but I think it's quite interesting because it offers a different perspective than everyone's typical onboarding experience. But Sassal, did you want to talk through how you got into crypto, and then I believe that you left, correct me if I'm wrong, and then came back at a later stage? Did you want to talk through that sort of experience?
Yeah, sure. So I'll try and give the kind of TLDR version because, yeah, I mean, there's a lot that goes into it. But I mean, I've been in crypto technically since 2013. So back in 2013, I had a friend who was kind of doing Bitcoin mining. He had bought these machines from a friend that he knew, and then he started mining with them. And then he bought some more machines and kept doing that. But that's how I originally got onto Bitcoin. And back then, I guess the ecosystem was totally different, right? Like Ethereum didn't exist. Smart contracts weren't really a thing. It was something that was discussed about in the context of bringing them to Bitcoin. And, Vitalik was around back then talking about them. But Ethereum as a concept hadn't been kind of, I guess, shared yet. He didn't share the white paper till like the end of 2013, basically. So yeah, it was really all just Bitcoin and like some offshoots of Bitcoin, like obviously Litecoin and then a few others for, the boomers among us. It's like Peercoin and Namecoin and stuff like that. And Namecoin was interesting because it was like the first, I guess, like version of ENS, where it was trying to bring like domain names on chain back then. But yeah, I mean, I got into it for pretty much the same reason that most people get into it, is for money, right? Like I was 21 years old at the time, I believe, and I had like dollar signs in my eyes, and I bought, I think, in like March of 2013, just before like the massive run started, because I think Silk Road got shut down in like April 2013. And then Bitcoin started, being in the headlines a lot, and then it went up a lot to like $1,000 or something like that. So that was my first foray there. I mean, I did fall in love with the whole kind of idea of a kind of non-nation state money, right? Like a decentralized money. I definitely fell in love with that idea. But I think for me, what was really missing the whole time was that I come from a tech background, not a kind of finance or money background. And Bitcoin as a technology was primitive. It wasn't something that you could do much with, right? There were all these ideas to do things on Bitcoin, but of course, none of those ever materialized for very different reasons. But I think, once the, I guess, price stopped going up in 2014, I kind of soft exited, where I basically sold off what little BTC I had left because I was an idiot and traded away a lot of it on shitcoins, like Dogecoin, for example, was the original kind of like, I guess, meme coin, I should say, maybe not shitcoin. I feel like people don't use the term shitcoin that much anymore. It's like meme coin because you want to give more legitimacy to this thing, right? But yeah, I lost a bunch trying to trade that because like I'm just the world's worst trader. But yeah, and then unfortunately, because I left in 2014, I missed Ethereum like back then, because obviously the ETH ICO happened mid 2014, and I missed that because I wasn't really paying attention to it. But then in 2017, I got back into it A different friend had mentioned Ethereum to me in early 2017, and he was like, "Hey, I know you were into Bitcoin, but here's this Ethereum thing, and it can do what you wanted Bitcoin to do at the time, which was basically, smart contracts, building stuff on it." And I think from there, the rest is basically history. Like, I haven't left since 2017. I've been basically full-time Ethereum since then. I mean, I wasn't working in crypto until 2019, but I had a shift job in cybersecurity where I was doing monitoring, and it gave me a lot of free time because I was doing like night shifts and things to just do a lot of research, spend a lot of time in the ecosystem. And of course, 2017 was also a bull market, so that helped with keeping me engaged in things too, of course. But yeah, since then I didn't leave, and I think that the first time I left in like 2014, that was probably the best lesson that I ever kind of learnt within crypto, still to this day, because it basically taught me not to leave when kind of things go south. Because if I didn't experience that lesson back then, if I discovered Ethereum in 2017, I'm not very confident that I would have stuck around in 2018 because, ETH went down 94%. It went from $1,400 to $80. And I don't think I would have stuck around for that. So that was like the most valuable lesson for me. But yeah, since then I haven't left at all. And I played it, I guess, like a lot more intelligently for the cycles since then, where I basically waited till, the deep depths of the bear market, bought more of the assets that I wanted to buy, and then wait for the bull market to come around. And that's kind of how you play these cycles. But that's kind of the journey that I've had over the last 10, 11 years.
Yeah, that's awesome. With that, basically, did you have a moment where before like all of the hype in like the 2021 cycle, did you have a moment where you thought Ethereum wasn't it, and you thought that any of like the spin-offs around that period of time during like the ICO era were going to replace what Ethereum was doing? How did you sort of navigate that period of time?
Yeah, so I don't think I ever felt like Ethereum was going to get supplanted by any of these, I guess, like other layer ones or any of these competitors. But I will say that back in like maybe 2017, 2018, I was a lot more open to them than I am these days in terms of just like looking at them and being like, okay, well, this thing's doing something differently to Ethereum. It looks a little bit, doing something kind of like cooler than Ethereum in some ways, and so on and so forth. So I wasn't like married to Ethereum like I am now. I guess people call me an ETH maxi for a reason, right? I was very much like more open, but I think it was more that I was open because of the tech side of things, not necessarily, I guess, like the different communities and the different kind of assets and stuff like that. I mean, I think the one that I was probably most open to at the time was Polkadot, because Polkadot was co-founded by Gavin Wood, which is one of the co-founders of Ethereum. It was really interesting because they were trying to do like this interoperability stuff between different kind of chains. And it was, I guess, like what Ethereum is today with its layer 2 ecosystem. But back then, even though we were talking about layer 2s on Ethereum, it was very different to what it is today. So I saw that and I'm like, this looks cool. And they were trying to do some different stuff around governance and so on and so forth. And they had their ICO in 2017. So I was invested in that too. Like I participated in that with ETH at the time. But then as time went on, as like 2018, 19, 2020 happened, I lost all interest in these other networks because Ethereum just became this thing that was the most exciting thing in crypto, and still is to me the most exciting thing in crypto from every angle that you look at it. Whether you look at it financially, whether you look at it as technology, whether you look at it as community. And generally, my view on layer 1 chains is that they are a reflection of their community, and they basically are an instantiation of a set of beliefs. And maybe people disagree with me on this, but I actually think that blockchains like Ethereum and Bitcoin are closer to religions than technology platforms, because essentially you have this group of supporters, so to speak, this community that some of them are hardcore, some of them are not, that all share these same ideals and values. Now, if you don't share those same ideals and values, you typically go to other ecosystems. So, for example, the Bitcoin maxis don't like Ethereum at all, right? Because it doesn't share their ideals and values. So they don't come into
testing.
You're a follower of one religion, you're not going to be a follower of another religion. It's very binary in that sense. And I think that's what we see reflected in crypto and across these different layer 1s, is that the tech, the platforms reflect their communities. And I think it actually is a really positive thing, because it means that the communities can basically balkanize around shared beliefs and ideals and don't have to get weighed down by things. But what I like about Ethereum is that it even extends beyond that, where basically we now have the layer 2s, which act like their own little worlds within the Ethereum umbrella. So I mean, I guess like that was a long-winded way of saying, I mean, I was a lot more open to other layer ones, back in the day, but these days I just don't see a point to a lot of them, to be honest.
Yeah, okay. That's interesting.
Interesting.
Yeah.
So with the layer twos in their current state, like obviously most of them are still centralized sequences and whatnot. I try to stay abreast of like where they're all in terms of their development roadmaps, but most of them still seem to be very early stage. What are your thoughts around what the future of that looks like in terms of like the decentralization spectrum versus like native ETH?
Yeah. So I think that if they could be decentralized today, they would be. I think it's just like a tech implementation thing, right? And a security thing, of course. Like the reason why they have these Security Council multi-sigs is because a lot of this stuff is very, very new, especially on the ZK side of things, very untested, very prone to like critical bugs. And if that was to be discovered and there was no way to essentially, I guess, pause the layer two or do a surgical kind of thing where you fix the chain so that that bug doesn't exist, then we would get the worst case scenario, which is that the chain would get drained of assets, for example, right? And there'd be no recourse because a layer two doesn't work like a layer one in that you can't do a regular state transition and you can't kind of roll back the chain, so to speak. If you don't have that kind of centralized control because of the fact that you're relying on Ethereum as your settlement layer. So essentially, Ethereum layer one would have to do that change in order to rescue the funds, and that's just not going to happen. So these controls are in place for, as I said, security reasons, but also tech implementation reasons. So I think that they would all be decentralized today if they could be. Like they want to be decentralized because centralization is a liability at the end of the day. It is a kind of a thing that it's basically a massive sign that you hold up saying, hey, we can do things on the chain at the request of governments, for example. Like, let's just say one of these L2s gets exploited by North Korea, and the US government goes to these operators or these L2 kind of like operators and says to them, hey, we know you can kind of pause these assets, or we know you can get these assets back, do it. Do you really think they're going to not do that, right? They're probably going to do it.
Well, that kind of happened with Blast almost recently, right?
I was literally about to
Right.
bring that up because it's like, with the calls for actually rolling back Blast because of that Munchausen's exploit. What did you think of that in terms of being like, I saw lots and lots of people being like, oh, well, it's a gaming chain, like it should be fine to roll it back. What did you think on that one?
Yeah, I mean, I think that they found the most palatable way to. I mean, they didn't roll back the chain, but they found the most palatable way to deal with this, which is, I mean, they haven't officially said this. This is just speculation on my behalf. But I think that this is what happened. So because they control the sequencer, they basically can control what transactions get processed. So what they would have done is basically just blacklisted that address from processing on the sequencer. So that address would not have been able to get transactions through, which means that those funds couldn't have been moved. And that's why you saw the hacker actually send the private key to Blast or the Blast team, because, if the Blast team said to them, hey, if the hacker said to the Blast team, hey, I'll send the funds back if you let me do a transaction, well, they're not going to do that. They'll probably just send the funds somewhere else, right?
Yep.
So I think what happened is they were just censored at the sequencer level rather than rolling back the chain, because rolling back the chain actually has like a lot of consequences, right? Because if you roll back the chain to say, well, I don't know, 100 blocks ago, everything that happened within those 100 blocks is now erased, right? It's basically a reorg at a massive scale. So you never really want to roll back the chain. What you want to do is either an irregular state transition, which is a fancy way of saying doing like a surgical kind of remedy, where essentially you only remedy what was exploited. You don't actually change anything else that happened during that period of time, or you do what I assume Blast did. As I said, like this is not something that we know they did. This is just me assuming that this is what they did, where they just censored the attacker, so they couldn't get any transactions through, even if they wanted to. So, but as I said, like centralization is a huge liability here, and I don't know if the US government would have contacted Blast and been like, hey, you need to reverse this, or you need to basically stop this from happening, or stop North Korea from getting their hands on these funds. But regardless of if they say it or not, like the logical conclusion for these teams is to use their centralized power. Like there's no point having that centralized power if you're not going to use it, right?
Exactly.
But that goes back to what I said about it being a liability, where they don't want this power. It's just in place because it's a security thing and also a tech implementation thing.
Yeah, cool, awesome. And I guess like my second question on that is like we're seeing different styles of L2s. So we've obviously got a lot of optimistic roll-up style L2s that are out with Optimism, Arbitrum, Blast, etc. ZK's slowly starting to sort of emerge out as the tech's getting better. I don't know if the optimistic rollups have ever actually had to challenge a 7-day withdrawal thing at this stage because of the centralization thing we spoke about before. But has there ever been a case of that yet so far that you know
I
of?
think so. When we talk about the optimistic rollup ecosystem, there are really two main frameworks in use right now. It's the Arbitrum framework and then the OP stack, which is the framework or at least the tech stack that chains like Base and Blast and OP mainnet use. So the OP stack doesn't have fraud proofs on mainnet
Right.
yet. They're on testnet right now, so it's actually impossible for there to be any kind of fraud dispute game happening on the OP stack chains because it's not implemented yet.
Yeah.
But Arbitrum does have it implemented on mainnet and has for a while, but it's permissioned, which means that only a permissioned set of actors are able to do the challenge game, as we call it. I think that there has been one instance of this on mainnet for Arbitrum, and I don't know if it was like an attack or a deliberate attack. Or if it was like a test that someone did.
Yeah.
But I remember that there was an instance of them doing it and it kind of worked there. But yeah, I mean, other than that, I don't think there's anything else right now, especially not on the OP stack chain since it's not even implemented. But in saying that, they actually plan to get their fraud proofs to mainnet, or they're called fault proofs sometimes, in a fully permissionless fashion. So different to Arbitrum, which is permissioned right now. But Arbitrum obviously also wants to get to permissionless fraud proving there as well.
Yeah, cool. And I'd assume because the OP stack, sort of a lot of people have adopted it in their own L2s. When that comes out, then most of those would also transition to that as well. Or would that be up to those people running that particular chain, like Base, for example?
Yeah, I mean, it's up to the chain, but I think that there is like an understanding among the OP stack chains is that if they want to be part of like the super chain, so as an OP stack chain, you can join the super chain or you can be on your own like little standalone island. You don't have to join, but if you want to join the super chain, there is a certain set of things you have to have, and like I assume that fault proofs or fraud proofs are one of those things. But at the same time, the nice thing about the OP stack is that there can be multiple, I guess, like fraud proof or fault proof implementations, but there can also be ZK proof implementations too. So what I suspect may happen is that once the ZK proof stuff gets a lot more mature, these optimistic rollups will just become ZK rollups because all it takes is swapping out the fraud proofs for the ZK proofs, essentially. I mean, I'm simplifying it, of course. I mean, it's a small work involved in that,
sure.
but it's not something difficult. So I do suspect eventually optimistic rollups will probably not be a thing, just because ZK rollups offer such a huge advantage. But the problem, I guess, right now, maybe not the problem, but like the issue is that the ZK rollups are much more prone to security issues, which means that these teams don't want to really be taking that risk right now and just leave the risk up to the pioneers, ZK projects out there right now.
That makes sense. That makes sense. I was gonna ask you next which L2 sort of technology do you think will have the longest term, but you kind of answered that one for me.
Yeah, I mean, ZK is the end game, as is the meme, right?
Yeah.
And like, I think it's definitely like way more than a meme. ZK, I mean, I think ZK is the end game for this entire ecosystem, not just L2s. Like, ZK has so many more applications than just L2s. I mean, privacy is one, but it goes like way beyond that. And I think that, as I said, like it's really just the safety issue with a lot of the ZK stuff because they're very new, untested. They're prone to bugs that are quite difficult to find because I imagine a lot of the auditing firms out there just do not have enough experience with this yet. So that's why things are moving relatively slow, but they're still moving faster than we thought they would. I think like 2 years ago, someone said ZK AVMs are like 5 years away, and we got ZK AVMs like a year after the bat or something. So it's moving faster, but at the same time, because it's moving faster, it means that we have to move slower on the decentralization aspect of it, where we need those centralized controls in place in case of security issues.
Yeah, cool, awesome. I guess my last little one on that train of thought is just around the liquidity fragmentation between the L2s in the current state before potentially ZKs and sort of account abstraction and better wallets come in play. But what do you think the liquidity fragmentation that we currently see between the different stacks has an effect on ETH as the ecosystem overall? And do you think that that's a short-term issue?
Yeah, I mean, I definitely think it's obviously a negative overall or something that like annoys people. But at the same time, I think it's like completely overblown. And I actually talked about this on my show yesterday. So when you think of liquidity fragmentation, it obviously doesn't just apply to L2s, right? It applies to like every kind of liquidity pool, so to speak, and every chain, so to speak. So for example, if I'm on Ethereum L1 and I want to do something on another L1, I have to bridge there, right? Like there's
Yep.
no interoperability between them except the bridging. Like there's no composable transactions, there's no atomic transactions. It's all just bridge over, and then you can do your transactions on that layer. So this narrative that has been kind of perpetuated from maybe the better part of like 12 to 18 months now is that, oh yeah, L2 suck because liquidity is fragmented. It's like my brothers in coin, like everything is fragmented. Like it's not just an L2 issue. So it's kind of something that I get really, really annoyed about when I see, because it just doesn't really make much sense to be fighting that aspect of it. But sure, from like a user experience perspective, it is not ideal. It is annoying. You know, it's annoying to have to bridge, right? But there are so many different ways that this is being tackled. And as you alluded to, I do think it's a short-term issue, because we have, I guess, like maybe longer term solutions like the ag layer and shared sequencing. And then we have shared short-term solutions like just the wallets making the UX a lot more seamless. And, you know, these institutions like Coinbase allowing you to easily bridge into these L2s. Like it's free to bridge into like most of the L2s via Coinbase, I believe. At least it is for Base, of course, since they run Base. But then at the same time, a lot of the L2s have enough liquidity for most people, I believe. You know, if your size is size and you're slinging like 8-9 figures, you're not going to be on these L2s. You're going to be on L1 because you don't care about the gas fees. So yeah, I really do think it's an completely overblown thing. And we've seen just how fast people are willing to move their capital around when there is a reason to do so. Like look how fast everyone went to Base once there was a reason to do so. So I really do think it's just a completely overblown narrative that people like to peddle because it's a way to kind of deride the L2s. But yeah, generally that's the way I think about liquidity fragmentation, is that it exists, you know, among like this entire ecosystem. It's not just an L2 specific thing.
Yeah, awesome.
I was gonna ask as well to add on to that. I've like a bias with ETH in the sense that I made like most of my money on ETH. So I mean, I don't know, but I have a feeling that a lot of people that made money on ETH, the wealth effect on ETH, don't actually want to leave ETH, even though a lot of people, you know, are experimenting on different chains like Sol, and you know, sometimes some people go on AVAX, but like I would never do that. But yeah. So I was it's not really a question, but it's more just like, I don't know if you'd agree that if you're comfortable on ETH, you just stay on ETH, especially when gas fees don't mean much if you've made so much money on there, because there is a lot of wealth on there at the moment.
Yeah. Yeah, I mean, I totally agree. And I agree based on not just like, I guess, the vibe of what you were saying, but also like anecdotal evidence. Like I have a lot of ETH friends that, you know, fit into the category that you just mentioned. There's two main things they think about. One is wealth preservation, because they don't really care about being like a max degen, you know, slinging into every new meme coin on deck screener. And then there's two where it's security for them. It's like, okay, well, I have all these assets. Why would I risk them by bridging them to this L1 when there's been so many bridge hacks before? Or why would I risk them on, you know, these L2s that are, some of them are, you know, very dodgy right now, and some of them are, you know, I mean, most of them are very centralized. And also, as you said, like there's no reason to move a lot of the time as well, because they don't care about the gas fees. They just like, okay, I'm going to be on L1 Ethereum. It's super decentralized, you know, it's super reliable, doesn't have issues getting transactions through. Yeah, okay, the fees are a bit higher, but hey, you know, I'm a whale, I can pay the fees. And I think people miss that. They think that everyone like is, I guess, like has $100 and that's it. Like they think for some reason people are just playing with small money. But as you said, like there's a lot of money on ETH L1 that hasn't moved at all. And that's because like they don't care if they're paying those fees. I mean, BlackRock did their fund on ETH L1 and they paid like $5 in fees to deposit the initial amount. I think it was $100 million into it. You really think BlackRock's having a silk over $5 fees? There's just
very true.
So people just seem to miss this fact that there's a lot of different profiles, obviously, within crypto and just within financial markets generally. And there are a lot of people who are very insensitive to fees and don't care about them. But then for the ones that are sensitive to fees, which is obviously probably the majority of people, then we scale via L2s for those people. And that's the whole kind of roll-up centric roadmap for Ethereum. And I think a lot of people are moving there or will never touch ETH L1 because they just don't want to pay those fees. I mean, if you only have got $100 to play with, or maybe you've only got $100 you want to play with because you don't want to risk your other money, you're not going to be going on ETH L1 and then paying like $20 to do a swap and immediately killing 20% of your, your bankroll, right? So there are different kind of strokes for different folks, as they say, and I think a lot of people seem to miss that, which is a bit weird. But I also think that when you see a lot of people saying these things, I don't even think they believe what they're saying. I think they're just saying it because it's like it's a narrative they want to perpetuate, right? Where it's like, oh, I'm going to say this because it resonates with everyone, and hey, it like pumps my bag, sort of thing. When in reality, they probably don't even believe what they're saying. And I kind of find it funny how the last couple of weeks, or maybe 3 weeks since Dencun went live and everyone moved to base, you see all these people saying, oh, it's a coordinated shill. It's like, guys, it's not a coordinated shill. You just thought that your meme coins were some kind of precious moat that people were going to stay on. And you thought that meme coins were going to be this thing that only happened on like Solana, for example. It's like, no, meme coins happen on any chain that there's money on. And like, it just was so funny to me seeing everyone complain about this. Oh, it's a coordinated ETH maxi thing. It's like, and then some people were saying, oh, it's a coordinated ETH maxi thing that they're attacking Solana, and that's why I can't get my transaction through. It's like, guys, like, I can guarantee you that the ETH maxis who have the ability to do that don't even think about Solana. So it was just hilarious to read those comments.
Yeah, it was a bit chaotic on the TL when people were throwing around the terminology that base was a forced narrative. I mean, I haven't bridged to base yet, but I'm sure that's on my to-do list. I had a question for you. If you had to stillman the argument for why BTC currently is a more desirable asset by market cap, just looking at ETH alone, do you think it's a lack of understanding about the possibilities of what smart contracts can provide to, I guess, like decentralized finance as the reason why, like the lack of general education out there as to why ETH is not more valuable than BTC? Like, why would you think at this stage that BTC is still perceived as more valuable?
Yeah, so I guess like that's a pretty deep question, but I would say that most of it has got to do with just like liquidity network effect, right? Where essentially BTC has a bigger network effect as an asset, has a bigger awareness network effect as like I guess like a brand. Obviously, and maybe this isn't obvious to people, but I think it's pretty obvious. Like if you talk to people about crypto, like the first thing they're going to talk about with you is probably Bitcoin. Like everyone's heard of Bitcoin. Like whenever I talk to someone and they ask me what I do, I actually still mention, do you know that Bitcoin thing? Like before I talk about Ethereum, because I know that they're going to know what Bitcoin is, and I don't know they're going to know what Ethereum is. It's basically a coin toss on that front. So I think that, most of it has to do with just like network effect of brand and liquidity too. But if you want to put maybe a more recent kind of spin on it and say like the last 6 to 9 months, so if you actually go back and look at what BTC's market cap was at the time that BlackRock filed for the ETF, so it was like June last year, it was basically less than what ETH's market cap is today, right? So BTC has obviously the ETF narrative that mooned it to all-time highs, but it also has those flows, whereas ETH right now doesn't have the flows, and it also has a negative narrative that people think that the ETH ETF is going to be denied. So I think that a lot of ETH's lagging, I guess, on BTC doesn't necessarily have to do with ETH versus BTC as assets themselves, but it has to do with the fact that, the brand is way bigger for Bitcoin. It has the ETF stuff. And the fact that, as you mentioned, I think a lot of people don't understand the differences between these things and aren't as educated on these things. And ETH is inherently a lot more complex to explain to people than BTC. But I think that until ETH gets its ETF, and until probably ETH gets a lot more awareness around it, because once it gets the ETFs, you'll obviously see a lot of these TradFi institutions talking about it, educating people around it. I think you're still going to see that kind of that difference there, and see ETH be like worth less than BTC. But at the same time, I think that gap can close quite quickly. Especially in bull markets where things get crazy. Typically, ETH tends to go up against BTC. But if we're looking like maybe 10 years out, I could see ETH being more valuable than BTC on that time frame. But I think people underestimate how powerful a network effect is and how powerful it is from like a liquidity and awareness perspective. But yeah, I personally think that ETH will definitely be worth worth more than BTC one day.
Interesting.
Okay, I want to jump in because I've seen you chatting about the ETH ETF, like literally tweet today, study May 23rd.
Yeah.
I was actually chatting with Eric Balchunas last week on the phone, and he was just like, yeah, but essentially like kind of saying there's fuck all chance of it happening, and like he's got the formal odds of just like yep, that's there, but he was kind of like, yeah, listen, like I'll be incredibly surprised if it happens. I've seen your conviction. What's your reasoning for that?
I mean, there's a lot of reasoning behind it, but I will say that, like, obviously Eric is the expert here. He is the ETF guy at Bloomberg, the senior ETF guy, and James, his colleague, is also there. And they've had a good track record for a while now. They obviously called the BTC ETF getting approved. But I think that obviously they're bearish on the ETH ETFs. Obvious to anyone who's been following them on Twitter, because it hasn't repeated the same pattern that we saw with the BTC ETFs, where essentially there was this back and forth between the SEC and the issuers, asking a bunch of questions, getting revisions done, all that sorts of stuff. So I think, Eric and James, to an extent, are basing their bearishness on that. And I wouldn't say that alone, but it's like mostly that from what I've read.
Well, that's what they told me. They were like, it's all to
Yeah.
do with the feedback. They're like, the radio silence is just a terrible sign. So
Yeah.
that's pretty much it. Yeah, you're bang on.
Yeah, I mean, and I get that, but at the same time, there's like a counter argument to that, in that I believe that the ETH and BTC ETFs are pretty much identical, because look, the ETH ETF, if it gets approved on May 23rd, would not be a staking ETF. I know that the issuers currently have staking in there, but I feel like they did that because they wanted to get the SEC to tell them to remove it, so that they could basically be like, hey, we compromised, we removed the staking part of it, now approve the normal ETFs for us, please. So I feel like that's why they did that. But if you actually look at the underlying, aspects of the ETF product itself, when it relates to BTC and ETH, it's basically the same, right? Same custodian, right? Coinbase and a couple of others out there. Same kind of product, in that the ETH has a CME futures market, and the futures and spot correlation is basically the same as it is for BTC. I know the SEC did their own analysis on this, showing that it wasn't, but we had Bitwise and Coinbase both do their own independent analysis and came to a much better conclusion, and I guess like much fairer conclusion than the SEC did. So from my perspective, I wouldn't actually expect there to be much back and forth, right? Because we saw the back and forth for the BTC product was because it was a new product, right? We'd never had a crypto asset ETF before. So of course they needed to dot their I's, cross their T's, make sure everything was, was fitting there. But when it comes to ETH, it just seems like to me that all you have to do is literally copy paste the BTC one, replace the BTC ticker with the ETH ticker, and then remove the staking portion, obviously, of it, which can be done in 2 seconds. It's not obviously a hard thing to do there. So just based on that alone, as being the counter argument, like I feel like Eric and James are too confident in their kind of call here, based on the fact that we have such a strong counter argument. But at the same time, just from like a paperwork perspective, like having enough time to do all the paperwork, you basically run a timer. I think that the Bitwise guys said that if by the end of April we don't see the actual paperwork being done, then just based on the time it takes to do the paperwork, we won't get it approved by May 23rd, right? So from that perspective, I understand it. But the reason why I've been so confident in it is because, like, I don't understand how the SEC is going to be able to deny the ETH ETFs without opening themselves up to countless lawsuits, as well as really bad headlines for like months on end, as well as kind of, I don't know how much of an effect it will have on the election, but there are some people that are going to vote like based on just the crypto issue alone, and they may be like, well, screw the Dems, I'm going to vote Republicans because Gary Gensler is basically running amok with all this stuff, and they denied the ETH ETFs for such and such reason. So that's why I kind of say that. But I think when I say study May 23rd, it works both ways. Like if it gets denied, it's still a very critical thing, because why is it going to get denied? Like, are they denying it because they think ETH is a security? Well, here we go. Now we've just opened up a massive can of worms that isn't just got to do with the ETFs anymore. It's got to do with all of crypto and what the SEC considers to be securities. And then if they deny it based on the future spot correlation, well, hello, they're about to get sued again, because that's what they lost to Grayscale on back in October. So there's so many arguments for this getting approved, like much more than there are for against. And that's why I think that Eric and James really are just basing their bearishness on the fact that there hasn't been much back and forth, because everything else points to it should get approved, right? At least that's my kind of take here. And the last thing I'll say on this is that I actually think a denial would of the ETH ETF would actually still be bullish, because it's not a question of if ETH is getting an ETF at this point, it's when. Like, everyone knows it's going to happen. It's just like, when is it going to happen? So I actually don't think that it would be bearish, because I think that most people have already faded ETH at this point based on the fact that I think the ETF is going to get denied. So from a trader perspective, that trade is done once it gets denied. And they're like, okay, well, that's the narrative gone. The narrative trade's gone. Like, okay, everyone's offside ETH now. Let's just bid ETH, basically. So I actually think a denial, ironically enough, would still be bullish for ETH.
I just wanted to ask, what would be their reasoning for not approving it in May? Because I understand that they've approved like the futures. Like, they've got a futures product. So what reasoning do they have? Is it the staking, or is it because it's a security? Like, what's the actual reasoning that they wouldn't approve it?
Yeah. So that's like the billion-dollar question, right? Like, no one actually knows what reason they're going to use. There's the two leading reasons, as I mentioned. Like, they can either deny by saying that they believe ETH is a security, and maybe they actually bring a case against, I don't know, the Ethereum Foundation, which is weird, and I don't even know how that would work. But let's say they sue the ETH Foundation, and then they deny the ETF, saying, hey, we can't approve an ETF for something that we have an active case against, which I think is really unlikely to happen. Like, that just screams scorched earth to me. Like, it just seems really dumb to do that. And then they could deny them based on the fact that the futures and spot markets aren't as correlated as they would like them to be, and that means that there's fraud and manipulation possibly going on within the spot markets, and that means that they don't feel comfortable approving it. So I think those are the two leading kind of, I guess, reasons that people are speculating on. But who knows? They could find some other way to do it. You know, they unfortunately have complete discretion over how they deny these things. They could actually not give a reason at all, even though that would open them up to like even more lawsuits just based on that. And like, but the thing is, I don't know if you guys saw recently, there was a case that they brought against something called Debtbox. And the judge basically said to them that this case that they brought was completely baseless. I think it was a crypto thing, completely baseless. And I think their lawyers, the SEC lawyers, actually broke the law by lying in court, which is obviously grounds for disbarment in the normal case. But who's going to disbar an SEC lawyer, right? So it does seem like the SEC has no issues doing illegal things, no issues, going scorched earth. And I think that's why people kind of look at this and like, okay, well, all the reasons make sense for it to be approved based on the facts and circumstances, but we're not dealing with rational actors here. So they're going to, deny based on irrational things, which I understand. But me being someone who likes to stick to the facts and circumstances, that just makes me really upset.
Yeah, well, I mean, you've seen your the two senators, I've forgotten their names, but they wrote that letter essentially saying that if you approve an ETH ETF, it opens it up. It's not like Bitcoin, which is already bad, but it opens it up to like pump and dumps. And they quoted like poor liquidity depth, even though you'd already had Coinbase and Grayscale actually sitting down in a meeting with the SEC being like, no, that's not fucking true. So it seems to also be extremely politically motivated as well.
Oh, it's 100% politically motivated.
Yeah,
it's got nothing to do with anything except politics, which is why it makes me upset, because it's just all bullshit, right? There is literally no reason to deny the ETH ETFs besides politics, besides, I guess, like Elizabeth Warren wanting to continue her war against crypto, which she's been called out and for like multiple times now. I mean, you guys saw when she tried to say that Hamas was like completely funded by crypto, and then these people came out and said, what the fuck are you talking about? Like, this is completely false. I think it was like 1% of funds held by Hamas had to do with crypto or something like that. So yeah, these politicians have literally no, I guess, like issue lying. And at the end of the day, the worst thing is that those politicians like Elizabeth Warren, she's in a safe seat. She answers to voters, right? And she probably has a lot of confidence that she's not going to get voted out based on ragging on crypto. But then you have people like Gary Gensler, who are bureaucrats that are appointed by the elected officials. They are not elected themselves. So they give even less of a shit about how they look to the general public. All they care about is looking good to their bosses. So it really is a lot of, I guess, political brown nosing and a lot of just, political bullshit, really.
Yeah, I agree with what you said. It's not if, it's when. I can't see a BlackRock application being denied.
They
So
can ask the issuers to withdraw their applications, though, which would technically not be a denial.
oh,
But
really?
there is an issue with that. I don't think Grayscale is going to withdraw. Like, even if all the others do, I don't think Grayscale is going to do that, because they, in my mind, are 100% going to sue if they don't get their conversion approved. You know, the ETH to the ETH spot ETF conversion. And by withdrawing it, like, I guess, weakens their case. So it really only takes one of them to not withdraw. And then, you know, if they deny the Grayscale one, like, the rest of them withdraw, whatever, but then the Grayscale one gets denied, immediately I think you're going to see a lawsuit again against the SEC. But the problem is that these lawsuits probably won't resolve till next year, which sucks, right? That means we're not going to get an ETF till next year if it doesn't happen in May. Yeah, there's a lot that goes into it, and
yeah,
unfortunately,
I didn't actually know about that withdrawal.
Yeah, I mean, the SEC can just ask them, hey, like, or basically say to them, hey, we're not going to approve these anyway. Like, you better withdraw. I mean, I don't think they're actually supposed to say say it like that, but who knows what they say behind closed doors. But yeah, there is an option that they can use where they ask the issuers to withdraw. You know, who knows? Maybe they already asked them to withdraw, right? Like, we won't know until it actually happens. But I feel like the issuers themselves, like, as I said, if only one of them doesn't withdraw, which I feel like Grayscale just wouldn't withdraw because it would weaken their case if they did, then that's all that matters, because they would still have to deny Grayscales, which I believe is due on May 30th or May 31st or something. 23rd is, I think, ARK, and 24th is like Van Eck, or the other way around. But yeah, the 31st would be Grayscale, and they're definitely going to sue. Like, there's no doubt in my mind that they're going to sue.
And that way they could win on, and even if it takes a while, you could get like another arbitrary and capricious ruling kind of thing.
Yeah, but then what throws a spanner in this is that if the Republicans win, Gensler is fired, and Trump will appoint his own SEC chair, who will probably be pro-crypto.
He'll definitely be pro-crypto.
Yeah, exactly.
Trump has made money on Ethereum.
Yeah. So exactly. So that would basically, I mean, I actually think we would get the complete opposite approach that we've gotten so far from the SEC, where you could even imagine the SEC withdrawing their lawsuits against Coinbase, Binance, and Kraken, right? Because they're baseless lawsuits to begin with, on the most part. So I feel like that those could even be withdrawn. So it's kind of funny how, if it, depending on who's in power, just dictates such a binary outcome here.
Yeah, makes sense. Do you think that, like, there's an element of them not wanting to, like, Tom alluded to it before, with, like, once you do the one, like with the ETH one, because of the whole security debate, like, then the Solana one pops up, and then the Doge one pops up, and then, like, there's like the floodgate of every crypto coin becomes an ETF application starts, and because BTC was always seen as like this side asset, and then ETH was like the next one because it's the most quote unquote security like, whatever they want to call it. If they approve this one, then what stops, like, why can't they approve all of the other ones that may become an ETF later? And maybe that's what they're holding out for the most.
Yeah, so they won't approve anything that doesn't have a CME futures market, and they want at least two years of price action. So no other assets except BTC and ETH have a CME futures market at this time. So it's at least, at very minimum, 2 years from now, and longer than that, because there's no other assets on there. I don't know when they're going to go on there, which means that that shouldn't be a worry for them. There's no floodgates that would be opened here, at least for 2 to 3 years or something like that. So that's why I kind of find it funny when I see this stuff even on Twitter. Everyone's like, "Oh, XRP's getting an ETF next because they won against the SEC." It's like that's not how it works. Like, it's not even on the CME. Like, okay, they won their lawsuit, but that's not how it works. So I think that floodgate argument is just another thing that they say to try and muddy the waters, but it doesn't hold any kind of relevance here in my eyes.
Yeah, nice.
Hear that, chat? You're gonna have to wait for your Doge ETF.
The funniest thing about them kind of saying that as well, like, obviously a lot of these crypto assets are, pretty dog shit, pardon the pun, but a lot of them are like not great investments. But at the same time, there are so many things that have ETFs that aren't great investments to begin with, and there are so many other products that exist, like GBTC before it converted, and ETH. They are the worst products. They actually, if you actually trace back where the blow up, or I guess like the leverage that blew us up in 2022 started, it was the GBTC Widowmaker trade of doing the ARB, where essentially you buy it because it's at a discount, and then you kind of like wait to withdraw a year later. But what happened is like all these funds bought it on leverage, and then the thing just kind of doesn't trade at fair value ever because it's based on the market whims, because it's a one-way kind of vehicle here. And you can actually trace back to a lot of the blow-ups to that. And that product exists, and that, you know, you're able to buy that product in your retirement account. So it really is insane to me that we have all these other really shit products that already exist within within the TradFi ecosystem, but apparently an ETH ETF is too much for them, right?
Yeah, it's crazy.
It's definitely politically.
Oh yeah, I mean the SEC is
have-
protecting no one, right? Like this is, you know, they're not sticking by their mandate at all. I mean, they didn't protect anyone from FTX or Terra or anything like that. And then they come in after and they're like, "Oh, we gotta now clean up after you guys." It's like, no, you should have not let us fucking make a mess of things to begin with if you're actually doing your jobs.
Well, I mean,
Yeah.
even with and this is getting a bit fucking into the weeds of shit, but SAB 121, SAB, like
Yep.
121, and just like that kind of thing of like enforcing centralized, custodian control essentially just purely to Coinbase, and then being like, well, we're protecting investors, and it's like by preventing banks from custodying crypto, you're making the entire system more prone to like a centralized blow up. So it's fucking
Yeah, I mean,
strange, like watching the SEC do this, because for a long time, I don't know, like I almost took like a more, I always try to take like a slightly generous approach where I can, where I'm like, okay, like what is the SEC's reasoning for not liking this, and trying to like, figure it out from a more, yeah, I guess, generous perspective, and then just kind of realizing like these fucking guys, what are they?
I mean, it's
What are
all
they doing?
regulatory capture at the end of the day, right? Like, I believe that the vast majority of regulations are set by the incumbent companies, right? The incumbent corporations who just set them up to benefit themselves. I mean,
Yeah.
like, for example, accredited investor laws, the biggest load of shit ever. It basically locks out anyone that wants to invest in early stage companies until those companies go public on the stock market. And then essentially the early investors and the VCs who meet the accredited investor kind of requirements, they get to dump on everyone at when it goes public, right? They get to basically use the retail people as exit liquidity. And the reason why they do this, and the reason why it exists, so this is my belief why accredited investor laws exist, is because if everyone could get into these investment deals, there'd be no one left to dump on in the end. So these, there'd be no exit liquidity left. So, they don't want that. What they want is a very kind of like small pool of people that can access this, or small pool of, I guess, like funds and stuff that can access this. And then once it goes public, then you can bring in all this other money. So they kind of like tier the money. You have like, I mean, this is very similar to the Big Short movie where, what's his name? Ryan Gosling is explaining the tiers of dog shit of these different kind of things. It's the same thing here. You have like this premium tier money, which is like the VC money that gets to access these early stage deals, and then you have all this other money that you want to access, but only when it's public, because this is like the premium money. This is the money that lets you exit. This is the exit liquidity, as we call it. So I think there's definitely a lot of that going on as well. And the SEC to me is a mafia where they basically go around, they collect money, collection money. They fine these different companies like, hey, pay a settlement and we'll let you get away with the illegal stuff that you did, basically. It's like, what? Like, what do you mean? Like, where was the investors protected here? You basically got your payout, you got your fine, and then you may order them to pay back investors. But if they've got no money left to pay back investors, if it's just gone, then who did you protect? You protected yourself, and you protected the, I guess, status quo, so to speak.
It's also quite interesting that a lot of these, elected bureaucrats and politicians have never actually used any of the cryptographic native products, yet they have such a large opinion on it. Which I mean, that's like an obvious, like, yeah, they've never used it before, but it's very funny that they can have an opinion on. Like, I watched a clip of Gensler, and one of the senators was questioning him in it and asked him, have you ever actually transacted on Bitcoin? And he just said, no, I've never used it. And it's just like, well, if I was telling someone about how to use a bike and I've never used it, that would be pretty silly. I'm saying, but
yeah, no, I mean, I totally agree, and I think that's a running kind of theme, not just within crypto, but like outside of it. We have people in power that make decisions on things that they have absolutely no clue about. And they're supposed to listen to their advisors and the experts and the different committees that they put together. But at the end of the day, because it's all politics and because they're just trying to essentially get votes, right? Like, and trying to appeal to a certain base. And because in the US, especially, things are so divided, you have this binary approach to things where if the Democrats are for something, the Republicans are against it and vice versa. And that's why you see with crypto, Democrats, I mean, not all of them. There are Democrats that don't hate crypto, but like the high-ranking ones, like Warren, Maxine Waters, and Gensler and stuff like that, they all kind of hate crypto, right? Whereas on the other end of things, Republicans are like, oh well, if Democrats hate crypto, we'll like crypto because that means we'll get the vote from the pro-crypto people. So that's what happens when you have like a two-party system. I mean, we're going into politics now, but that's what happens when you have a two-party system, I think, and it just kind of balkanizes around that. But yeah, I mean, that's the saddest thing, right? Where we have all this really cool stuff that we're doing and we're being held back by this just, I guess, boomer generation of politicians that just don't understand this tech at all.
Mm. Yeah. All right, I'm gonna move it away from the political side now and move back into blockchain politics, just because I really do want to. I kind of wanted to get you to run on this, Sassal. Oh, and this is returning to the discussion we're having before. There were a couple of questions in chat about, just Solana, ETH dynamics. And, you're talking about base being a forced narrative and like the whole shit on Solana, like just Solana meme coins in general kind of popping off before base and other layer twos. But now, I mean, now that Solana is kind of more difficult to use,
hold him back, boys.
I love how you found the most, like, I guess, nicest way of saying that. That was good.
I've tried sending money from different Phantom wallets about, I'm going to say 11 times, in excess of 10 times today, and none of them have actually fucking worked. So now that Solana is practically fucking unusable.
Wait, sorry. Can I just say something? What's actually the issue right now? Like, I'm not a Solana blockchain expert. Like, what's the issue that's causing the congested blockchain? Does anyone know?
Well,
yeah, Sassal,
they say it's that. I mean, I'm not an expert on it either, mind you. But I mean, they say it's one thing, and then another person says no, it's this thing, and then you have a lot of mincing and massaging of words going on because I don't think they want to actually kind of say what it is. But the TLDR is that there are certain issues that can be fixed by like technical kind of fixes, but a lot of the issues are economic and game theoretical, and those take a long time to fix. I don't think they want to say that because it basically means that they're saying to users, hey, we don't know when this is going to not be an issue anymore. That's my general read on it right now.
What's the deal? Like, what are those game theoretical issues that you see?
Well, I mean, so the technical issues, I'll just say those ones because those ones are easier to point out. It's like the networking stack that they use. So they use an implementation called Quick, QUIC, which is currently not like optimized well and has kind of fallen to the wayside because they didn't really do much work on it. I think the Firedancer client that they're building is trying to improve it, but that client's not out yet. So obviously those improvements aren't there. But there's a lot of that stuff going on essentially on the networking stack side of things, which I can't really speak in detail to because I'm not an engineer, so I don't understand it in detail. But that's from what I've read, a lot of issues there. But then when it comes to like the economic game theory stuff, it's the age-old thing of, hey, like if you have like really cheap fees, then what do you think is going to happen? Like you're going to get a lot of spam, right? You're going to get a lot of these bots just spamming the network because it's like really cheap to do it. And if you don't have the, I guess, capacity or the ability to process those transactions in a way that allows them to be distinctly separate from real user transactions, which is basically impossible in a permissionless environment, then what happens is that you have to rely on incentives and game theory. And now to map that out takes years. Ethereum is still trying to rectify this, by the way. Like this is the whole thing around MEV, right? So what ends up happening is that you have users competing with MEV bots for block space, and MEV always wins. I mean, I put a tweet out about this in December, I think, where I said that MEV comes for every chain, and if your chain doesn't know how to deal with MEV, your chain is going to break. And that's what we've been seeing with Solana. It's like not broken, but like it's the UX has degraded a lot because of this. Now, I don't think they're going to be able to simply fix this with a technical thing. I think this issue is going to keep reoccurring because of the fact that they do allow the chain to essentially be DOSed. And what that means is a DOS stands for denial of service, What that means is that all of this spam, all of these MEV bots are basically DOSing the chain for all the regular users. They're denying the service to regular users because their transactions are getting processed first. And then if you implement something like priority fees or like an EIP 1559 style fee market, which is what obviously Ethereum L1 has, the fees go up. So you're in this kind of zone where you're trying to preserve cheap fees for everyone, but really the only known way to prevent DOS attacks is to have the fees increase, because it means that it becomes expensive to spam the chain. So Solana is in this very weird place now where they either increase the fees, which is like sacrilege because their whole thing is being a cheap fee chain, right? Or they kind of like try to massage their way around it and keep the cheap fees while also somehow eliminating the bots, right? Or not eliminating them, but like making it so that they don't degrade the user experience for everyone else. And I will say that this works in a permissioned environment. So I think that a lot of the Solana architecture was built based on, I guess like maybe Web 2 kind of way of building things, where essentially you can control that environment. You can basically revoke API keys from people that are spamming your service, for example, or you can essentially control who has access to your service. I know Anatoly, one of the Solana founders, typically says that he wants to build a better NASDAQ. Well, I'm sorry, Anatoly, but NASDAQ is a permissioned system. It doesn't have to deal with this. It has MEV, it has payment for order flow and stuff, but that's all completely permissioned. The NASDAQ operators have complete control over who gets to actually use the network, use NASDAQ as a product here. But on a permissionless blockchain, you don't have control over that. Everyone can use the network, and MEV bots obviously are the ones that are willing to both pay the most and also spam the chain the most to get their transactions in, because it's worth their money to do that because they're making profits from that. So in that environment, in a permissionless environment, you can't employ the same tactics that you're used to employing in a permissioned environment. It's a completely different game. And this is why Ethereum has been architected the way it has at layer 1, is because the Ethereum researchers have known about this for many years now. MEV is a core part of the Ethereum roadmap, dealing with that and making sure it does not negatively impact users. And I will say that the reason why L2s aren't suffering from this right now, even though they're cheap, is because L2s don't really have MEV right now because they have centralized sequences in that you can't order the transactions. It's a permissioned kind of thing where essentially the ordering of the transactions is controlled by the person who's running the sequencer. And right now, because the sequencers are centralized, they're run by the base team or the Arbitrum team, for example. But this is going to potentially be a problem for L2s as well.
Nice. Interesting.
Yeah, I mean, I'm not like as I said, like I'm not an engineer on Solana. I'm not like an expert on these things, and I'm sure there'll be people that kind of maybe have different I guess views on these sorts of stuff. But as I said, I feel like a lot of it on crypto Twitter right now is a lot of kind of trying to not say the quiet part out loud, like I just did, because you don't want to admit that the issue is going to last for longer than, I guess, like even a week. I saw a date thrown around that there's going to be a kind of patch that they're putting out on April 15th that should alleviate the issues. But it's not going to alleviate a lot of the issues. It's going to help somewhat, I suspect, but it's not going to alleviate the core issues, which is the ones I just explained, because those things take years to work out. And I don't actually believe that there's a solution besides having the fee market that Ethereum has, which again is not great because it basically breaks the Solana narrative of being the cheap and fast chain. So I think that there's a lot of that going on. But then I guess going back to what you were talking about with regards to base and stuff, and people saying it's a forced narrative, I think that on crypto Twitter you have a lot of the most plugged in crypto native people and the ones that are like speculating the most, and the degens as we call them. And what happens is that when they feel their bags are threatened in any way at all, they start lashing out, right? And this isn't just true of, I guess, like Solana people lashing out against Ethereum. Obviously, Ethereum people have lashed out against Solana as well. Like when Sol was going up against ETH, you saw all the cope and the seed, as they say, right? But it works both ways. And I think that if you're trying to pay attention to things and trying to kind of get, I guess, like reality from those narratives on crypto Twitter and other places, it's very hard because you never know who's talking from like a bag bias and who's talking from like fundamentals and the text perspective. Because if you're talking from like a fundamental and tech perspective, you're usually not spending all your time on crypto Twitter. You're usually actually working and working a proper job. You're not slinging $100 into different meme coins every day. So I think that's why there's a divide there between what you see on like the public square versus what the actual reality is. And I think like I try to sit in the middle, honestly. Like with my show that I do, I stick to as much of the facts that I can, much of the reality that I can, without going into the narrative world too much. But then I also sit on crypto Twitter and I look at all the narratives and I try to study them. And I'm like, okay, this doesn't make any sense. This is just people, shilling their bags. But I don't actually say that because I'm just going to get swarmed. If I was to go on crypto Twitter and say the things that I'm saying now, I get swarmed by all these people. And then people look at that and they're like, oh, Sassal must be wrong because he's getting ratioed by all these people. It's like, no, it's just people coming at me because I'm threatening their bags at the end of the day. So I think that's why you see that kind of play off each other on crypto Twitter there.
Yeah. Speaking of shilling bags, where was thinking about what your thoughts are on L3s, because that's become a topic of discussion rather quickly. And the platform that we're on, full disclosure, is about to launch an L3 quite soon. But yeah, I was purely just curious as to we saw DGen pop up and we saw it rocket to 700, 650, 700 mil valuation rather quickly. What do you think of L3s just in general?
Yeah, I mean, on the value front, I would say that DGen rocketed up because it was it is a meme coin to an
Yeah,
extent.
it had a meme.
Yeah.
Yeah,
Like
that
I
was
feel
the
like that had
reason.
nothing to do with the tech. It was just more to do with the fact that it was a meme coin on base that had been out before everyone shifted to base, and everyone's like, "Oh my god, DGen is like the native meme coin of base. I'm going to buy that." Which was good for me because I got an airdrop when it was worth like nothing, and then I sold it like recently because I'm like I'm not going to like ride this to zero, but regardless of that, I think that when it comes to like L3s, what's funny about them is that you actually don't have the different L2 players agreeing on their value prop. So I think Arbitrum is all for L3s and DGen chain is built using Arbitrum's orbit stack. But then you have like the Polygon guys saying they don't see the point of L3s. And what I like about this is that I actually agree with both their perspectives, where I see the value in L3s for things like app chains. But then I also agree with the Polygon, I guess, stance that, hey, we can just do the app chain stuff with layer twos. We don't need layer threes to do that. We can just do it with L2s. But right now, we can't because the tech isn't there. Like the L2s still have to develop their tech and ship different ways to do it. Whereas Arbitrum Orbit is already live and people can make their own L3s. So that's what I like about it is the fact that we have very smart teams disagreeing on things, and we also see the experiments playing out. But again, I guess it goes back to sustainability as well, where it's like, okay, well, DGen chain had a lot of activity, but then how sustainable is it? Like, is this going to be something that is long-term sustainable? Is it going to be able to create a long-term sustainable ecosystem? Is it going to be something that doesn't just become an L2 eventually because, hey, there's a lot of activity on this chain now. They can afford to be an L2, even if it's a bit more expensive than being an L3, and they get more kind of, control over certain things or certain aspects of things, and they get more interoperability between the different layers. So we'll have to see, but they're so new, and I understand that people make fun of them as well because some people say, no, they can't even do L2s yet, and now they're doing L3s. Like, how many layers do we need? But all I think of it is it's just experimentation at the end of the day. And I think that there is a lot of, need for experimentation with L2s and L3s, but there's also a lot of drive from these teams because they want to not just experiment, but they want to show that they're more than a meme coin. Like DGen wants to show that it's more than a meme coin, and I think it is. I mean, I had a call with the founder ages ago now, but I had a call with him, and I was talking to him, and he just genuinely wanted to build cool things. He loved the fact that people were tipping each other on Farcaster with DGen. He's like, I just want to build like a culture around this. I want to build tech around it. And it was genuine. He didn't want to build a meme coin, but then it became a meme coin because it's called DGen. I mean, the name lends itself to that. So I think that there is a drive, at least within the DGen ecosystem, to make it more than a meme coin, but that could be to its detriment as well because people will see that and be like, oh, it's bearish. Fundamentals on meme coins are bearish. So we'll have to see how that plays out there. But generally, I'm pretty. I guess I would say I'm neutral on L3s, where I see the value prop, but also see the reasoning that Polygon gave, where they say, hey, these things are just pointless in the end state, where L2s can actually just do what L3s can do. So yeah.
Yeah, interesting. I think my view on L3s is just simply that, back to the earlier discussion, we haven't really done the decentralization thing yet on the L2. And then so on the L3, you've got like this liability on the L2 side, and then you've got another liability on the L3 side. And it's kind of like, well,
Yep.
why do we need to do this on a blockchain in the first place? Like we're so that far removed. But I fully agree in the point where it's just experimentation. People are building stuff at the moment, and Sanko, the platform that we're on, they're just trying to build something that fits within their own tiny little ecosystem. They're not trying to build a whole L2 or go down that road. They're just trying to build things that their whole little ecosystem tie in together, but then like the token naturally comes back to the Arbitrum layer, which is then, you got the settlement layer for in Ethereum. So it scales within that architecture, but they just want to build something that's just theirs. And you could argue you could just build all of that on ARB, and which is what they're originally doing. But I just think they're just trying to get that value accrual back to their native token, and they're trying to build an ecosystem around their native token, which ultimately is based on the layer 2. So I can see both sides. I just think it's probably that early stage people are playing around. And they're probably thinking about it more than they need to at this point in time.
Yeah, I agree with that as well. I also think that I just feel like they'll figure it out once they get to the layer 4.
And if not, we can just go to layer 5. Like,
Yeah, why
that's all we
not?
need to do. Just keep adding more layers. No, I mean, I generally kind of agree with that point overall. That yeah, it's just like it's too early, I think, to have any strong opinions on these things. And it's gonna be, I guess, like interesting to see, as I said, like how sustainable it is, because like I believe that the 99.9% of meme coins are like completely unsustainable, and I think that people will say, oh well, ETH and BTC are meme coins if you really think about it. And I'm like, yeah, but like they're not meme coins first. Like they can be a meme coin, but like if your literal defining thing is that you are a meme coin, then people are automatically going to treat that as a short-term thing. At least the people that are in the know. I know a lot of the other people, like the noobs, probably actually buy into this stuff if they're new to the crypto ecosystem, and they actually think that this meme coin is going to be relevant in like 6 months, let alone 3 years. Some people are saying that. I've seen on Twitter. When someone's like, "Oh, we'll revisit in 3 years which meme coin is more valuable," I'm like, brothers, like,
bro, Sassal with hat is gonna be like $1 billion valuation soon. So
yeah. So and they obviously use like other meme coins as evidence, like Dogecoin. They say, "Oh, Dogecoin is still like the top 10." I'm just like, yeah, but like how many others are not even in the top thousands? Like,
Dogecoin
come
is the
on.
original. Like it's
Yeah,
there'll
exactly.
never be like if something's an original, it's obviously going to be around. You know what I mean?
Yeah, but I guess
The
also
rest
very
won't. Like
yeah. There's the original aspect, but also the different dynamics in that. Like a lot of Doge is actually lost completely because it was just worth nothing when it originally kind of came out, and people lost wallets and stuff like that. So I mean, I know I lost my original Doge a long time ago. I had so much Doge and I just lost it. So, but it was worth like nothing, so I didn't care. But now that it's worth something, people are like, oh shit, So it's like basically early Bitcoin on steroids, where there's a lot of Bitcoin from early on that got lost. But I think that I don't know if anyone's done an analysis on it, but a lot of it's lost, which also obviously adds to the fact that it has staying power because there's just not that many sellers, in the terminal state.
So we've probably only got 10 minutes with you left, but I think a question I really wanted to ask you is what's exciting for you in the Ethereum roadmap in the next 12, 24 months, now that we're done with Freight 4.4?
Yeah, I mean, I would say that because we've already talked about like the L2 stuff and the L3 stuff, I could probably take us in a different direction, something that we haven't spoken about, which is restaking. I think that if I was to describe how bullish I am on restaking, it's like probably as bullish as I am on Ethereum. Maybe not that bullish, actually. Almost. Because I think there's two main things with restaking. One, it kills a lot of the Ethereum's competition in that it makes like having a layer 1 or having like a separate network or having something separate that's not in Ethereum's orbit like not a good play, because essentially if you want to create like a new thing, you can just use restaked ETH to secure it, right? You don't have to go like spin up your own node operator set. You don't have to go get your own community together. You can just kind of stay within Ethereum's orbit. So it's like doing for L2. So it's doing for like everything else what we did for L2s, where you can basically stay in the Ethereum ecosystem and stay in the Ethereum orbit, which I think is really bullish for Ethereum overall. But like secondly as well, it's just like a huge value driver for ETH as an asset, right? Like it just, I mean, we've seen the ballooning of stake because of restaking, and that obviously puts net demand on ETH as an asset. It reinforces ETH's kind of moneyness and store of value properties. It allows us to expand the Ethereum ecosystem way beyond, or Ethereum staking ecosystem way beyond just even LSTs into these LRTs, and then beyond that. And then we get to basically bring all of the, as I said with my first point, bring all of these kind of things into Ethereum's orbit. Like for example, there's going to be an Oracle network that builds with EigenLayer that's going to use restaked ETH. There's going to be like sequences that use it. So essentially, instead of these networks having to spin up their own kind of, I guess, like node operator set and use their token as a staking token to secure that and then put downward pressure on that from like inflation and issuance, they can just reuse Ethereum security, so to speak, to do that. So I think that, yeah, overall, it's just like incredibly bullish for the Ethereum ecosystem. And it's a primitive that we haven't had before, restaking within, like, I mean, I know that Cosmos had like an, I guess, maybe I wouldn't say it's the same thing, but they had like the interchain security thing, but it's very different because Atom as an asset is not viewed as a store of value or a money. No one really cares for it. It has been one of the most performing assets in crypto, actually. So I think that has been a massive detriment to, you know, that interchain security thing they wanted to do. Whereas ETH as an asset is incredibly strong. It's incredibly in demand. It is viewed as a store of value and as a money. And Ethereum's node operator set is also very decentralized. You know, we have thousands of node operators out there. And node operators here is defined as just like people running the infrastructure, like running full nodes and running validators. There is, you know, many, many thousands of those, but they're not just people, right? They're companies, you know, institutions, different groups of people doing this. And those people can now do that for not just Ethereum, but for other networks as well. And you just tap into such a vibrant, decentralized, geographically diverse node operator set, which no other network has. Not even Bitcoin has this. You know, Bitcoin's node operator set is way worse than Ethereum's, like in terms of centralization versus and geographic distribution. So yeah, that's kind of in a nutshell on restaking why I'm so bullish on it. But I think that it's also a huge narrative right now because obviously EigenLayer doesn't have a token or anything yet. People are farming points. You got all these other protocols like EtherFi on top of them that are like recursively farming points. So yeah, it's just a lot of kind of money being made right now from it. And that's why I think a lot of hype is around it too.
Yeah, nice. That's really exciting. I guess that's kind of interesting because a lot of the Ethereum killer side of those sort of products in the Celestias, your dimensions and all of that are happening in the Cosmos ecosystem. There's a lot of like narrative forming around that. So once that's all ETH centric with ETH offering the same sort of solutions, that makes it pretty exciting for ETH overall. That's pretty cool.
Yeah, exactly. And I think, I mean, I know that there are like newer L1s out there that are like, I don't know, I'm not going to say getting traction. It's more like they're getting narrative traction, like Aptos and Sui and Say and things like that. And they'll have their cycles. But I think generally, like, Ethereum just doesn't have any competition from the layer 1 side of things. Like, I feel like Solana competes with layer 2s. I don't think it competes with Ethereum L1. Like, no one is trying to say that Ethereum L1 is like an execution layer, right? Or is like a layer where a lot of activity is going to happen, like a lot of TPS. And it's not being built like that. So I think that because I think that EigenLayer or restaking in general plays a part in that, wherein that it just doesn't make much sense to create these kind of L1s anymore. Just, you know, create L2s and secure them with EigenLayer, or decentralize them using EigenLayer, for example, and it's much better and it keeps it within Ethereum's orbit than trying to create this other thing. And I think that the L2 ecosystem just plays off nicely on the experimentation side of things with EigenLayer as well from that perspective there. So yeah, I mean, that's just generally how I think about all of that. And I think the next few years is definitely a golden age for Ethereum. Like I've been saying that a lot lately, but I definitely believe it.
Moments. I was going to ask, and this is probably a very long question, but if we can possibly sneak it in. I was wondering about like the risks that come with restaking. Like this is just my I don't know. I guess the idea of getting yield on yield just instinctively crosses me as like one of those things that I'm kind of like, ooh. What do you see as the main risks, if there are any, with restaking that you're like that you actually consider to be problematic, if there are any?
I mean, I think the main risk would just be like, let's say you have ETH in EtherFi and then they use that ETH to like restake with some AVS. So the AVS is basically like the product within EigenLayer that people can spin up, like an Oracle network would be an AVS, for example. Like the risk might be that that's like a rug, for example, right? Like they just run away with the money somehow, which I don't even think is a real risk because there's going to be so many controls in place to prevent that. And then people talk about like slashing risks. That is also a non-issue, I think. Like if like you're not going to get slashed on your Ethereum stake, you basically get slashed on EigenLayer. You can't get slashed on Ethereum. So it's like a broad topic, but yeah, main risk would basically just be the same as any other smart contract, right? The risk of bugs, in my mind, right? I think that those are the like main risks, and I think that when you're talking about like yield on yield, it's the same thing as putting your money into like some DeFi protocol and then them paying you tokens as like rewards for doing that, and then you get like a yield based on that. It's the same thing with these EigenLayer services. They're going to pay you tokens as like a yield that they give you for basically putting your restaked ETH with them, but then they also will get like usage, and then they'll pay you like fee revenue from that essentially. So that you'll know where the yields come from. They're either going to come from inflation of the token, which obviously means that the people buying the token are the yield. You are the yield, or it's going to come from just natural demand to use that. So you can imagine, EigenDA, which is EigenLayer's flagship product, which is their data availability network. You can imagine people paying to use that. Let's say EigenDA is making like, I don't know, this is really far out there because it's not going to be making this for a while. But let's say it's making like $100,000 a day in revenue. Well, that will be distributed, in the ideal case to EigenLayer, to the restakers that are restaking on EigenDA. So that's the yield comes from that. But let's say that yield's getting juiced by some other token incentives as well. And then on top of that, you can have, one pool of restaked ETH be restaked across multiple different services. So say you're restaking against 3 different services, you now have 3 different tokens coming to you, as well as 3 different pools of fee revenue coming to you as well. So it goes deep, and you have to really be aware of where that yield's coming from. But I don't really see that as a risk because you're not going to lose your ETH for getting this Ponzi yield if it's just the token yield, right? You're just going to get less yield because the token price will go down. And you'll only lose your ETH in a smart contract issue, or if, I guess, like the service gets slashed. But then I think initially the slashing conditions are going to be so weak where you'll maybe lose like 1 ETH if you put 32 ETH towards it. Like it's really forgiving. So yeah, I don't really see there being like huge risks, from that kind of perspective there.
Okay, awesome, man. Thanks so much for answering that. That's one of those like just, I guess, instinctive things that I just felt with it. But that's fucking awesome.
Yeah, it was good, really good.
Chat. But burning questions, guys. Couple minutes left. Anything we are desperate to ask Sassal while we have him here?
ETH price prediction this cycle.
Yeah, that's a great question.
I mean, this cycle I've said 15 to 20K. That's the range that I've given. I think that it's kind of funny when talking about this because people give their ETH price prediction based on ETH getting an ETF or not. The people will say, well, if ETH has an ETF, it'll go, to 15, 20K. If ETH doesn't have an ETF, it'll go to 10 to 15K. I actually don't think ETH needs an ETF to go to 15 to 20K. I feel like just the fact that we go into like a full-blown retail-driven bull market again, which we're not in right now, by the way. That's a hot take, but we're definitely not in that bull market. But if we do, I feel like there'll be enough capital coming in and there'll be enough like rotators coming in, like rotating from like BTC into ETH sort of thing, that ETH can still go to 15, 20K without an ETF. So that's my kind of general target for this cycle.
What are gas fees like when ETH is at 15K?
Well, this is like triggering my kind of brain of gas fees are not tied to the price of ETH. They're an independent fee market, but like I'm not going to bore you with the details on that.
But
I mean, if
one gwei is one gwei, right? So
yeah, well, that's it literally, and the gas fees on Ethereum are priced in ETH, they're not priced in US dollars because obviously the Ethereum network doesn't know what US dollars is. But yeah, basically, I mean, if it's the same gas prices today, I mean, if ETH's at 20K, it's like another, what is it, 5x from here?
Yeah.
And if the gwei price is the same, it's like 20 gwei right now. Let's just say it's cost you $10 to do a transaction. It's going to cost you $50 at the same gas price if ETH's 20K, obviously.
Yeah.
If it makes you
But at
feel
that
any better,
point, yeah.
Sassal, I just think we've topped for this cycle. I think the top is in. I've seen
See-
too many people make money off Sol meme coins without me, I'll include. It's time to pack it up. I think everyone needs to calm down, reset, get back to the core fundamentals of why we're here.
Yeah, that's never happening, unfortunately, because why we're here for a lot of people is degen meme coin shit. So get used to it, unfortunately.
Casino.
If I must.
Oh, awesome.
Oh, no, that was sick.
No
Mate,
questions from me, lads. That was really good.
Yeah, thank you so much for joining in with us.
Yeah, thanks for taking
really
the time
cool.
out of your day, Sassal.
Yeah, all good, guys. Thanks for having me
Yeah.
on. It's been a great chat. Just shooting the shit. Love it.
yeah, mate.
Awesome.
Thanks so much for coming on and doing some charity work on a Tuesday evening. That's really nice, man.
No, all good, all good. Thanks for having me on.
Cheers.
All right,
Awesome.
ladies and gentlemen, Anthony Sassano.
Thanks,
Thanks,
Chad.
guys. See you
Thanks.
later. Bye bye.
Thanks, guys.
Bye.